Racing for the Sports Channel.
Alrighty, well, unfortunately we have a small red day recap to go over real quick. We had some really good swing trades, but our day trading was a little bit lackluster today. Today's lesson will be mostly on where to place your stop loss. What is the point of no return where you got to be wrong and cut your losses and live to see another trade? So our first trade of the day was DKNG, DraftKings, and DraftKings was getting a nice good price upgrade. So what we posted in the Discord chat was to go long on DraftKings, DKNG over 51. Got to be quick. Stop is hourly below 50. And my target was just about 53. So what we did was DraftKings put in this nice good triangle pattern in the morning, and then it broke its initial morning high. That's usually a good buy point. So we got our first entry on DKNG just over 51. Got a nice pull up, nice back test of this demand zone support. Then we broke the initial morning high again, so I added over there. Then we just got this nice good consolidation, and then we got another triangle pattern. So I added yet again to DKNG. So I have some really big size at this point in DKNG. If we take a look at our chart, $1,185 in calls, which is actually quite a bit of money. And we got this nice good consolidation, got a breakout. My target was at least 52.80. I had my order just sitting there, and we started to base out. We came back, we started putting higher lows. I was like, oh, triangle pattern. I might even add again. I even have an alert at 52.40 to add to DKNG. And right over here is where we started to break down. And this is where I started getting suspect of DKNG when it broke 52. And so this kind of goes into our lesson about stop losses. You can have tight stops, medium stops, and loose stops. I went with a pretty loose stop on DKNG, and I unfortunately had to pay for it. So if you were to have a tight stop, you would stop out just below 52. A really tight stop just below 52.20 based on where the formation and structure of the market was at this point in time. So tight stop right there just underneath 52.19 when you see the triangle pattern starting to break down. Medium stop just underneath 52, and I gave it a really loose stop. We pulled all the way down. We came as low as 51.31, got a nice pull up, and I was like, I don't know if I like this. I put in a hard stop in the system just underneath 51.39, and that triggered. Unfortunately, I had to sightsee a little bit, but that's okay. It was a crazy day in the market. SPY was ripping like crazy. But we had to unfortunately stop out of DKNG, and that was for an annoying expense trade of minus $137, $132 actually, so maybe not as bad as I thought. But DKNG, had I not taken that stop loss, it would have been minus 300, minus 350 if I would have sold the low. Not saying I would have sold the low, but that's DKNG. The opportunity cost of DKNG was actually pretty great too. As we can see in the game plan, we said to go long on DDOG at 110/109.50 with a stop as an hourly close below 109. Ddog went right into that support and got a nice bounce. We said to target the 113.40, and Ddog went as high as 113.60. So that would have been a really nice trade, but I was unfortunately messing around with DraftKings, so I missed that trade. Not only did I miss DDOG, but I also missed Facebook right into my support level, right about here. And Facebook went as high as 280 from that move. That's a monstrous push up on Facebook. That's, 4% on a large cap on Facebook. You can make some bank on options. So that's unfortunate being in DKNG at that point, but, the charts don't lie. You got to stop out at some point. Our swings moving forward are going to be a DKNG debit spread. We got the 52/54 call debit spread. Looking for a little bit more of a swing trade through, momentum through DKNG, and we'll be stopping out of that if DKNG closes a day below $50 a share. Then this is just a price upgrade cuck for people to get out and institutions to get out and sell their shares and kind of dump the price on people as they're buying into strength. So that'll be if I'm wrong. Otherwise, DKNG should reach something like 54 this week. We are also still swinging Ddog. We have we have an in-out spread, a vertical spread. So a little bit, we need the spreads to mature a little bit before they can realize their max profit. So we're just sitting nice and peacefully on those. We are showing a bull flag on the 5-minute and the hour chart, which is really good. Those generally play to the upside. Watch for Ddog to still have continuation. You can add over the old all-time high, 114.55. Another swing trade that we're still holding is NEO. NEO, our stop is an hourly close below 2140 / an hourly close below 21, and we'll be out. But NEO is still gearing up for an explosive move. We've gone sideways for quite a while on NEO, and so if it can close hourly above 22, that should be the catalyst to break all-time highs and look for those upper targets of 23, 23.50, 24, and much, much higher. Maybe the length of this flagpole right here of maybe 16%. That's NEO. Moving forward, be careful swinging bullish positions. The SPY is extremely extended to the upside. We're due for hourly or daily consolidation at any point in time. So buying up here is pretty risky. If you're long, you can still ride it. You can just trail your stop. SPY is in a situation where if you're long, you should ride it, but you really shouldn't be shorting up here. And so it's kind of a tough situation. So keep riding your bullish positions, but I would not be adding to bullish positions up here because you're buying risk at prices this high. We are likely to probably pop the all-time highs because we've gotten so close, but just be careful. Watch out. We left a lot of unattended gaps down here. So a 2% drop, a 3% drop, 4% drop is not out of the question for SPY. Fill all these gaps and still be in a nice, healthy uptrend. The juiciest dip buy for me at this point in time is around the SPY 340 area, 340, 339, 338. That represents this old all-time high. Alrighty, thanks for tuning in. See ya.